So welcome back, students. This is lecture 9 of decision making tools. That is additional problems, second lecture. First lecture of additional problems was lecture 8, right? And then we did transfer pricing. Okay. So this is second lecture of decision making additional problems. Tomorrow we will do one more lecture on additional problems. Okay. So tomorrow this will be concluded. Your decision making tools. So this is for CMA Intermediate June 2023 attempt. Your exam is supposed to start from 15th of July. Okay. Right. So now, I will take you to the study material. Okay. From where we had ended last time. So it was here. So we finished till problem 13. Okay. This is problem 14 onwards we had to do. So today what we will do is, so we'll do from problem 14, we'll do 5 problems. Okay. And then we will check 4 more problems, which I'll give you as homework. Okay. After 5 problems, there are reasonably simple problems, another 3. So that I will give you as homework. And then tomorrow we'll continue further. Okay. That's the agenda for today. So let's see. This is your first problem for today. So before that, I'll just tell you certain things. Okay. Again. So what are the main things in your marginal costing? First is, see, this chapter is very, very important. Okay. So maximum weightage is for this chapter. And second is standard costing. So you put decision making tools and standard costing together. Okay. So you can easily attempt at least, you can say 35 marks out of 50. Okay. So these two are, that's why very, very important. So now in marginal costing, first thing is your marginal cost statement, which is sales minus variable cost of sales gives you contribution, less fixed cost gives you profit or loss. Okay. This is your primary statement using which we solve all our problems. Okay. And then you have certain formulae. So this one is, which is called as equation method also. It is nothing but the same marginal cost statement which we are seeing here. Okay, we write it in equation form. Here we are writing it in vertical form, right? It's S minus V is equals to C. Okay, so that is what is here. Okay, C is equals to S minus V. There's another equation here. C minus F is equals to P, profit or loss. Okay, or what you can say, C minus F is equals to P, right? If you bring F this side, you will get it C is equals to F plus V. So this is not any new formula. You can just derive it directly from your marginal cost statement. Okay. Then we talked about limiting factor. Okay. So in limiting factor, you know that whatever is the limiting factor, how we will judge which product is more profitable is you will find the contribution per unit of key factor. Okay. Always find contribution per unit of key factor. So what you are going to do in key factor problems, just first find out contribution as usual. Okay. First step will be find contribution. Okay. Then second step will be divide contribution, that is C, okay, by the key factor. Okay. So once you do this, you will get contribution per unit of key factor. Okay. That you have to compare. So we will be doing one problem on this today as well. So you will be able to see how it is done. Okay. The profitability is judged by contribution upon key factor. Okay. And here all be careful about whatever additional words or synonyms are used. Okay. Key factor, you also call it as scarce factor, governing factor, limiting factor, or constraining factor. You also call it as principal budget factor. Okay. So these are the names. So sometimes they can ask you with a name which is not very popular. Okay. Fine. So they can just say that, find out the governing factor. Then you might think what it is. So you have to be very careful about the synonyms. Now, next is certain formula, important ones. One is your profit volume ratio. Okay, profit volume ratio is C by S into 100 if you want in percentage, or if you want in decimal, just C by S. Okay, then this formula is very important, this one. Okay, so for this, as we had seen in the last lecture, so we had done many problems of where we use this formula. Okay, difference in profit upon difference in sales into 100. So you'll be given 2 years data. Okay, you'll be given sales and profit. So you just can take difference between sales and profit, and into 100 you will get the PV ratio, and with this you will be able to set up the entire marginal cost statement. Okay, fine. So this is one, and then okay, so these problems also we did. Fine. Okay, one more thing is variable cost ratio. Okay, so variable cost ratio is nothing but the complement of PV ratio. Okay, so if PV ratio is 40%, variable cost ratio will automatically be 60%. Okay, and you add the two, you will get sales 100%. Okay, so that is variable cost ratio. So if variable cost ratio is given in percentage, okay, just do 100 minus variable cost ratio, you will get PV ratio. Okay, so if it is given in decimals, just do 1 minus variable cost ratio, you will get PV ratio. Fine. So these are the things which we have seen. So angle of incidence, I'd shown you the angle of incidence also, it is important. So you can just refer to the previous lectures, okay, and see what is angle of incidence. Okay, next thing is margin of safety. Okay, it is sales minus break-even sales. Okay, so here in this diagram you can see the green one, this is the total sales. Okay, in from this, if you remove the break-even sales, this part remaining will be your margin of safety. Okay, so this part then which remains is your margin of safety. So one is sales or total sales minus break-even sales. Okay, another important formula is this profit upon PV ratio. Remember this. Okay, so this formula will be very, very useful. Okay, so there'll be every time there is some problem or the other where you have to use this formula. Profit upon PV ratio is very, very important. Okay, so you have to remember this. Then okay, so there is one problem which we had done, which said that what happens when these things increase or decrease, what is the effect on PV ratio. Okay, that we have already done in the last lecture. So you can take a look. Then absorption costing. Okay, this part is already completed, right? Then absorption costing, what I would tell you is, see, so I have given you a comparative statement between absorption and marginal costing. Okay, just take a look closely where the change is. Okay, in absorption costing. Okay, here main thing is in your production costs in absorption costing, you include fixed overhead also. Okay, whereas in marginal costing, okay, you first put variable cost, all variable costs. Okay, and that's how you get cost of production. Okay, in this one, in your absorption costing, you also add fixed manufacturing overhead. So that is the difference here. Okay, and in this side, in marginal costing, you do add fixed overheads as a separate line. Okay, here you can see all fixed production, administration, and selling are added together, and you put it as total F. Okay, so in when we use the marginal cost statement, okay, this is your S. Okay, and this entire part, okay, is your okay, and selling and distribution. This entire part is what we write as V in your marginal cost statement, which I'm showing in violet here. So S minus V gives you contribution here. Okay. Less fixed cost gives you profit. Okay. So if you get a problem on absorption costing, so we have already solved problems on absorption costing. You can refer to your previous lectures. It will be strictly based on this format. You just need to know this format. That's it. Okay. If you get anything about absorption costing, right? That won't be too complex. You just need to know this format. Okay. Right. Now, then we also saw effect in stock, opening stock, closing stock. Okay. That also we discussed last time. And then we did all the problems, right? We did till problem 13. Fine. So I will now take you to, this is your problem 14. Okay. Till 13 you can find in the previous lecture, which is lecture 8, correct? So now let's go back now. Okay. Now following particulars are extracted from records of a company. What have they given you? Okay. They've given you sales. There are two products. Okay. Product A and B. These are per unit values. Okay. So now consumption of material is what they are given. That is, this is for 1 unit. Okay. For 1 unit, you need 2 kg of raw material. Here you need 3 kg of raw material. Okay. When this consumption of material data is given, it is just to find key factor. Okay. If they tell you material is the key factor, you have to divide by this and find out. Take the contribution, divide by this 2 kg and 3 kg. So you will get contribution per unit of key factor if material is the key factor. If material is not the key factor, this line has no use. Okay. Right. So the next is our variable cost total, material, wages, direct expenses. Okay. These all are our V. So add this 10 plus 15, 25 plus 5, 30. We get what? V. Okay. So, and apart from this, let's see if anything else is given. Okay. So you have got overheads they have given separately. In this also there is variable. Okay. So this variable also will have to add to the direct variable. Okay. So variable cost will get by adding these, which is direct variable cost. And this is overhead or indirect variable cost. We'll have to add. So if you add this, the green blocks which I have shown, you will get the value of V. Okay. So for the product A, if you see, is how much? 10 plus 15, 25 plus 5, 30. 30 plus 15 is 45. Okay. 45 should be your V. Okay. So here, let's just see, check. Okay. So sales is 100 and 120. These are the notes which I have made for you. Okay. So sales is 100 and 120. See, this is 45. Similarly, the second one, if you add, you'll get VS 51. Okay. So now again, you have been given machine hours used. Okay. So this data also is for key factor calculation if machine hours is the key factor. Otherwise, it has no use. Okay. So now this is also key factor information. And then overhead, in that you have been given fixed and variable. So variable we have already used. Now fixed you can only use when you have got some volume given, right? Certain number of units have to be given, only then we can calculate the total fixed cost using that. Otherwise, this per unit fixed cost is of no use. Okay. So let's see. So now using this data, okay. So using this table, first we'll form a marginal cost statement. Always do that. Okay. Form a marginal cost statement, right? Sales is 100 and 120, and we had already calculated the variable cost. So we can get data till here. Okay. Sales minus variable cost is equals to contribution, right? So till here, we've just created a marginal cost statement. Okay. Fixed cost, why we have not used this? We do not have units information. When they give units information, that time we can use fixed cost. Okay. So now just calculate whatever you can calculate. PV ratio 55 upon 100 is 55%. Okay. Here 57.5%. Okay. So calculate whatever you can. So PV ratio always, whenever you get a marginal cost statement, first just write PV ratio then and there, just below the marginal cost statement. Okay. Right. So fine. This direct wages per hour is given in the problem. I've just written it. Okay. As an information. That's all. Okay. So how I got that is 15 is your direct wage cost. Okay. Direct wages cost is 15 and you have got machine hours is 3. Okay. So here 15 upon 3 I have written as 5. Okay. So that's just an information. Just written that. Okay. We may or may not need it. Okay. So at the beginning of the problem, you should just write whatever information you have, just tabulate it. Okay. It's okay if some information is not needed also, right? So now after this, let's see what is the main problem. Okay, we've just tabulated all data. Now, okay, here they have given, okay, here they have given direct wages per hour is ₹5. Okay. So direct wages per hour is ₹5. Okay. So 3 hours has been used. Okay. Actually, this is the data which I had written there. Okay. Direct wages is ₹5. Okay. So let's see whether we may or may not need it. Right. So now what have they asked? Okay. So let's see what have they asked. Comment on the profitability of each product. Okay. Okay. Both use the same raw material. They've given that both are using the same raw material. Okay. For key factor calculation, they're not using different raw materials. Fine. And then okay. So we have to comment on the profitability. Total sales potential in units is limited. Okay. The total sales potential in units is limited. So normally in all problems, your sales is the key factor automatically, correct? Because you cannot sell as much as you want. You only can sell as much as the market takes, correct? Sales in general is the key factor. If you do not have any other key factor, then sales is a key factor. Okay, sales potential in units is limited. So what you will do, that means you can sell only limited number of units. Okay, which is normally it is true every time. Okay, so what will you sell more? Okay, a product B gives you more contribution. Okay, say you are able to sell only 100 units, either this or this. Either you can sell 100 units of this or this. So what will you choose? You will choose this B because it is giving you more contribution per unit. So in all, it will give you 6,900. This will give you 5,500. Okay. So if sales in units is limited, you will go by this. Okay. Now, second, what they have asked is sales in value is limited. Total sales potential is limited. Here units are limited. Okay. So which means that either you can sell only a certain number of units. You will go for this or this. That is the question. Now, sales potential in value is limited. That means they are saying that say you can sell goods worth 10,000 rupees. Okay. You sell this product, you sell whichever product, you can sell only till 10,000 rupees. Okay. These things happen when you have got there is some government restriction on the market. Okay. That time your sales potential in value can get limited. So here what you have to do is, okay, sales potential in value. Now both consider that now this you are selling for 100. Okay. you're selling for rupees 100, you are getting contribution of 55. So if you are selling this product for 120, so you have to convert this also to 100. Okay, then you can compare for sales value being the same. So that means in the second line, what we have to do is 120 is the sales value, 69 is your contribution. Okay, if 100 was your sales value, what will be your contribution? Okay, this is nothing but your PV ratio. Correct? 100 into 69 upon 120. 69 upon 120 to 100 is nothing but your PV ratio. Okay, so for the second part, if your sales value is limited, always compare PV ratio. Whichever PV ratio is more, that is better for you. Okay. For the first part, if it is units, consider contribution per unit. Okay. If sales value is limited, that means these two you can sell for the same amount. Total sales can be of the same amount. If it is 10,000 here, it will be 10,000 here also. Okay. So in this case, you have to go by PV ratios. Now, second one is more. So this is what will be your decision for the second. Okay. Now, third and fourth is raw material is in short supply. Raw material is your key factor. Okay. Fourth is production capacity in terms of machine hours is the limiting factor. So here we have got material 2 kg and 3 kg. So we'll find contribution per unit of key factor. Okay. So let's go down here. Right. So this is what is our statement. So statement also 55 and 69. Okay. Just find contribution per kg of key factor. Okay. So contribution upon, this is your contribution, divide by 2. First one was 2 kg of material was needed for 1 unit. And second one, divide by 3. So 69 divided by 3. So you get contribution per unit of key factor. Similarly for machine hours is other way around. For first one is 3 rupees, second one is 2 rupees. Okay. Just divide and get the value. Okay. So when material is the key factor, which one is more? This is more or this is more? Which is more? Which contribution? A is more. Okay. So you will go for A. Okay. So whichever contribution per unit of key factor is more, that you will choose. Okay. In the second case, you can see B is more, right? In the second case, 34.5 is more. Okay. This is more. So in the second case, if machine hours is the key factor, then you will go for producing B. Okay. This is how decisions are taken. Now this is one. The second one, okay, that is what is your problem one. Okay. A part. And B, they're saying assuming raw material as the key factor. Assuming raw material as the key factor. Okay. So here they have given us that raw material is the key factor. So we can already use the data for raw material as key factor, which we have calculated above. Okay. And then they have given us something more. Availability is 10,000 kgs. Assuming raw material is the key factor, availability of which is 10,000 kgs. Okay. That means key factors maximum limit they have given. We only have 10,000 kg. Okay. So what will we do? Say if we did not have this data, this sentence after that which they have given, say it is not there. Okay. Just think this is not there. Only this much is given. Then what you will do? 10,000 is the kgs which you have total. Okay. So which product will you manufacture? आप कौन सा प्रोडक्ट मैन्युफैक्चर करेंगे? अगर सिर्फ इतना दिया होता जो मैंने काट दिया है उसको छोड़ के, ठीक है, इसमें बस इतना देखना है आपको कि मैंने जो बताया 10,000 kg आपका रॉ मटेरियल, ओके, अगर ये है तो आप किसको प्रोड्यूस करते, ए को या बी को? You would have produced A. Why? Why? Because contribution per unit of key factor is more in A. Here we had calculated. Okay. So you would have manufactured only A, right? But now that is not the question. Now the question is, one is availability is 10,000 kgs of material, but after that, one more thing they have said. Okay. They are saying that it cannot be sold, each product cannot be sold more than 3,500 units. Okay, find out product mix which will yield the maximum profit. Okay, so now what they are saying is each product you cannot sell more than 3,500. So which is more profitable for us? A first, correct? So how much you can sell A maximum, sell it out. Remaining we can sell B. Okay, now 3,500 units. We know that for A, 2 kg is required for 1 unit, correct? So total how much kg? 3,500 into 2, 7,000 is required. Okay, 7,000 kg is required. So for 7,000 kg, use it up fully for A. Remaining 3,000 kg, you will manufacture B. Okay, for B, 3 kg is for 1 unit. Okay, so in that 3,000 kg, you can prepare 1,000 units of B. Okay, so now this is going to be your statement. The first thing is just write down A. So because A is giving you maximum profit per unit of key factor. So sell A as much as possible. You can sell up to 3,500. Okay. Contribution per unit you know already from the statement above. Multiply these two, you will get total contribution. Okay. This will be your total contribution because we have to find the profit, correct? End result of profit we have to find. So this will give you total contribution. So from contribution, what you will do is, okay, just deduct the fixed cost because now you have got units. Okay, so you can multiply by per unit fixed cost was given as 5 for X, 100 and not 100, not 100, it is 10. Okay, and 10 for Y. So 3,500 into 5 gives you this. Okay, into 10 gives you this for this side. Okay, this data we have not yet calculated. So this gives you, okay, your fixed cost. Okay, this minus fixed cost will give you your profit. Okay, so now next is, so what is remaining now? See, from 3,500 units, okay, how many kgs can we manufacture? How many kgs have we used up in 3,500? How many kgs have we used up? 7,000. Okay, so 7,000 kgs you have used up, and they have already given you that only 10,000 material is available, 10,000 kg. Remaining is 3,000. In 3,000 kg, how much B we can produce? For one, you can produce 3. For 1 unit, you need 3 kg. In 3,000, you can produce 1,000. That's how they got this 1,000. And then this contribution per unit already we calculated above. Just use it, multiply it. You'll get 69,000. Okay. This fixed cost we just saw. So now what you can get is you will get the total fixed cost. Add these two. Okay. And you will get the total fixed cost. Total fixed cost is 52,500. From the total contribution, deduct total fixed cost and you will get the profit. Okay, understood? That is problem number 14. Okay, now problem 15 is relatively simple. Company has capacity of producing 1 lakh units of a product. Okay, 1 lakh units it can produce. That's the total 100% capacity. Okay. Now, sales department gives you the schedule of sales prices that is possible. Okay, this is the schedule of sales prices. So it says that this is the volume of production and this is selling price per unit. Okay, so here if at 60% capacity you can obtain selling price of 0.9. At 70% capacity, because you want to sell more, you will have to reduce your sales price, so it is 0.8. Similarly, it will go on reducing. Okay, such that for 100 it is 0.61. Okay, so then they have given you V. Okay, V for all these level is the same, which is 15 paise per unit, that is 0.15. In rupees it is 0.15. Okay, total fixed cost they have given 40,000. It will remain the same for all levels. Okay, so now, right, so in this, okay, okay, let's see what they are asking us. Prepare a statement showing incremental revenue and differential cost at each stage. Okay, incremental revenue is how much revenue has increased from one level to another level. That is incremental revenue. Differential cost is the same as incremental revenue, but for cost. Differential cost is how much cost has increased from one level to another level. That's all. Okay. At which volume profit will be maximum. Okay. So how we have to do it is, you have to calculate it for all levels. Okay. So 1 lakh units is the total. So for 60% production, it will be 60,000 units, 70,000 units, like that. Okay. So sales, you will get a 60,000 units into 0.9 for the first one. Okay. And variable cost is 0.15, you know. So 60,000 into 0.15, that you will get the variable cost. You will get the contribution minus fixed cost profit. Right. So for all these levels, we'll calculate the profit. Okay. So, so they are asking at which volume of production will the profit be maximum. Okay. So when you just directly compare all these marginal cost statements, you will directly get at which level it is maximum. Okay. There it's not a problem. Only thing is you have to understand what is incremental revenue and differential cost. Okay. That I will explain you. Okay. Earlier we have discussed incremental revenue, differential cost concept. Okay. It was some other problem. Right. So now in this, so this part, I don't think we have to talk about much right here, that all these units till the marginal cost statement level. Okay. The first thing is just go for your marginal cost statements. That is, sales for first will be 60,000 into 0.9. Okay. V will be 60,000 into 0.15. You will get the contribution minus fixed cost, give you profit. Same will do for all 5. Okay. That is clear. So let's just do till that much. And then we will talk about that. Okay. So now here are our capacities. So these are the units. Okay. And then we have the sales. Okay. So how we got this sale? For example, for the first one, 60,000 into 0.9. Into 0.9, if you do, you'll get 54,000. Same thing you have to do for the rest. Okay. This is how we got the sales. Then V, they have given its constant 0.15. Okay. So V is constant at 0.15. So 60,000 into 0.15. That is what is this. Okay. So sales minus V. Okay. And here is your fixed cost. Fixed cost is 40 for all activities. So just put 40,000. Okay. Right. So now we know the total cost. You can add the two variable costs. You will get the total cost. Fine. Okay. So till here. So now with this, if you compare this, if you say of this, if you prepare a marginal cost statement, you will directly get at which activity level it is the profit is the highest. Okay. But they want us to tell using incremental revenue and differential cost concept. Okay. So now next two column is your incremental revenue and differential cost. How to use it, I will explain. Okay. These two, let's first go with, okay, differential cost. See, it's very, very simple. Okay, I'll tell you. So just get the total cost, add fixed and variable cost, you'll get the total cost. Okay. So whenever you start, first thing will be dash. Okay, you have nothing to compare, so it will be dash. When you go to the second thing, okay, just do second minus first. 5,500 minus 49,000. That gives you 1,500. Okay. Now for the next one, you have to compare with the previous one. Okay. For 52,000, we'll compare with 5,500. 52,000 minus 5,500, write the answer here. Okay. And for after that, again, you'll compare 53,500 with 52,000. Okay. 53,500 minus 52 gives you this. Chalo, okay, so this is our last one also we will do. These are your differential costs at these activity levels. Okay, these are your differential cost. Incremental revenue also same thing you will do. Whatever we did in cost, do it in revenue. Okay, same thing we'll do, but we will do it in revenue. First two, 56 minus 54 gives you 2,000. Okay, right, this is 2,000. And second one is 60,000 minus 56,000. Okay, so that gives you 4,000 here, right? After that, if you do 6,300 minus 60,000 gives you only 300. Okay, gives you only 300, and this one gives you only 400. Okay, so now in differential cost concept, right? So you understood how we got this table. So now to explain how much till how many units shall we manufacture, okay, using this concept. So what you should do is always see in the second one, your revenue is more than your cost, correct? Incremental revenue is more than differential cost, right? This is 2,000, this is 1,500. That means you're going to get something extra. So you will, so manufacturing till 70% is okay for us. We are happy with it because we are going to get more revenue. Next, now let's go to the next step. Shall we manufacture 80%? Again, this is 4,000 and this is 1,500. We are still getting more revenue. Okay. So we are again happy with this. So we will manufacture 80,000. Now go to the next one, 90. Okay. For 90, see the revenue is less, cost is more. So if you manufacture 90%, okay, your total profit will be less by 1,500 minus 300. Okay. Because the cost has become more by 1,500, revenue has become more only by 300. So it is not desirable to manufacture 90%. Okay. Similarly, you should see the next one also from 90 to 100. Okay. So when you are, say, we have said that for 90, it is not desirable. Okay. For 100, again, here, this is 700 revenue and this is 1,500 is the incremental cost. Okay. So again, cost is more than revenue. It is not desirable. Okay. I'll just tell you one thing extra here. Okay. Here, one more thing is, see, here, okay, we said that this is not profitable because the cost is more than revenue. Now, if in the next time, okay, if in the next one, let us say your incremental revenue in place of 500, if it was, let us say 2,000. Okay, let's say if it was 4,000. Okay, in place of 700, if you got incremental revenue 4,000, then what will you do? Will you stop here or will you come till here? Okay, for that I am giving you this explanation. If this is in place of 700 is 4,000, then how much is the difference? 2,500 in our favor, correct? Revenue is more by 2,500. And here, how much is the difference? It is 1,200. Okay, 2,500 is still more than 1,200. So you'll go by the decision. What you are doing actually is, if in between you've got a line where revenue is less, but then in the next line revenue has again become more, just add the two and compare. Okay, add the two and compare. Okay, the net. Fine. So I hope you would have understood this. So that's why what should be our decision? We will produce only 80%. 80% is the best. Okay. This you can get directly also using your marginal cost statement. just form a marginal cost statement using this part. Okay, you will directly get maximum profit in 80%. Okay, but this was just to explain the differential cost and incremental revenue concept. Okay, got it? Okay. Next one is okay, problem 16. The operating statement of a company is as follows. Okay, you've got sales 80,000 is 80,000 units at 15 each. Okay, it is 12 lakh. So now your variable costs are okay, material, labor, overheads, these are our variable costs. Okay, till here 7,20,000 are variable cost. Fixed cost is given as 3,20,000. Okay, so sales minus variable cost, okay, will give you contribution minus fixed cost will give you profit. Okay, you have to get a habit of speaking. Okay, you've got to speak, because even if you complete your ICWA, if you're not comfortable speaking out in a group or this, okay, the degree will not help you. You'll have to go to interviews, and okay, there you will have to speak. So if you are very shy of speaking, then you will have to improve it. Okay, so now so this is what we have got is your total marginal cost statement is ready here. Okay, so 12 lakhs is your sales at 80,000. So we can also form a per unit statement here by dividing by 80,000. Okay, that's it. So then what are they asking us? Okay, now the question is capacity is 1 lakh units. Okay, total capacity is 1 lakh units. And now, okay, we are doing 80,000. This is for 80,000. That is 80% of 1 lakh units, correct? So we are at 80% activity level, correct? Okay. So a customer from USA is desirous of buying 20,000 units at a net price of 10 per unit. Okay. So he wants to buy 20,000 units. That is, we have got spare capacity of 20,000 units or 20%, correct? So he is ready to buy 20,000 units. And he is saying, I'll buy at a net price of 10 per unit. Okay. So we have to advise whether the order should be accepted. Will the advice be different if the customer is a local one? This part we will see at the end if the customer is a local one. For now, let us see what we should do for the USA customer. Okay. Now the same, all these things will just put it under marginal cost statement. Okay. The first part. Okay. This is our present profit. Okay. Whatever they have given, that is put here. 12 lakh is the sales. Okay. This was your variable cost, 7,20,000 minus, because the contribution was 4,80,000. The contribution minus fixed cost is profit. Okay, this is the first thing which we have got. Now, okay, so let us see for order value 20,000. Okay, so now just see here for order value 20,000, what is the selling price that he is ready to take, that we have been given in the problem. Okay, 10 per unit. Okay, is desirous of buying 20,000 units at a price of 10 per unit. Okay, so for this 20,000, 10 is our SP. So 20,000 into 10 is 2 lakhs. That's how we got 2 lakhs. Now the question is, how will we get this variable cost values? Okay, we need the variable cost values. Okay, what you can do is, see, 80,000 is the per unit. Just divide all this by 80,000. So here it will be 24 upon 8, which will be 3. Okay, this is 3. So 3 into 20,000 units is 60,000. This is how you got this. And this one is 4. 8 4s are 32. Okay, so 4 into 20,000 is 80,000. This is how we got these three. Okay. Now we have got the variable cost total. Sales minus variable cost, your contribution is 20,000. Okay. So you are already getting profit. Your fixed cost is covered here. Okay. You are already getting profit. So fixed cost is already fully recouped. So this 20,000 you can earn extra by this order value. Okay. Fine. So what is the what is the current selling price you will get by doing 12,000, 12 lakh upon 80,000. Okay. So 120 upon 8. Okay. 60 by 4. 4 ones are 4, 4 5s are 15 rupees. Okay. 15 is the per unit is the current price. So he is asking at a lower price, 10. Okay. But still you are getting contribution extra. So you can accept that order. Okay. Which is why we will accept that order. This line is nothing but they've just added everything, added both the lines and just given you a total. Okay. So because your profit is increasing on accepting the order, you should go for it. Right? If he's a foreign customer, because if it's a foreign customer, you can sell it for a lower cost and the current market will not be spoiled. Okay. Because the local market is such that once you reduce the price, okay, everyone, other competitors will also reduce because of you. Then you will not be in a position to raise it again. Okay. But in foreign orders and all, it will be, a one-time order and things like that. So for that, you can sell it as at a lower price. Okay, that is okay. That's why if it is a local customer, you will not accept the order. Why? Because the market price then can go permanently down. But this order for foreign customer, you can take it as a one-time measure. Okay. That's this problem. Okay. Now, illustration. Next is problem 17. Okay. So this was, I have written the name of Priyanka here because she had a doubt in this problem. Okay. So today she's not attending. So I'll pick this problem up tomorrow. Okay. Because it was specifically brought up by a student. I'll do your problem 17 tomorrow. Okay. So next is problem 18. Okay. So problem 18 says umbrella manufacturer marks an average net profit 2.5 per piece. Okay, net profit is 2.5 per piece on a selling price of 1430. Selling price is 1430, profit is 2.5. That's what they want to say. Okay. By producing and selling 6,000 pieces or 60% of capacity. 6,000 pieces they sell at selling price of 14.3 and get a profit of 2.5 per piece. Okay. Cost of sales is, what are there? Material, wages, okay, works overheads and sales overheads. These are your variable cost, okay, per unit. So now, see, if you take this selling price 14.3 and deduct profit 2.5, okay, 2.5 is the net profit, okay. So here, so what we will get is per unit of variable and fixed. So this will be total of that. So 14.3 minus 2.5 will be 12.3, 11.8. Okay. So 11.8 will be the total of this. Okay. So this is, you can see 1.25 plus 6.25 is 7.5, 10.5, 11.8. Okay. So this is how, this is 11.8. So out of this 11.8, we have to separate material and wages are fully variable. Okay. For the rest, you have to separate works overheads and sales overhead, fixed and variable you have to separate. Okay, fine. So then okay, during the current year, he intends to produce the same number. Okay, that is 6,000 pieces only you want to produce, but anticipates that fixed charges will go up by 10%. Okay, so fixed overheads will go up by 10%. So how will get fixed overheads? By separating this out of 6.25, 50% is fixed. So you'll get per unit multiplied by 6,000 pieces, multiply by 6,000. Okay, so you'll get fixed overheads in this part, works overhead. For sales overhead, 25% is variable. So 75% is fixed. That is 0.8 into 75% is fixed. So 0.2 is fixed. 0.2 into 6,000 you will do and add the two fixed costs. That will be your fixed cost. Okay. Right. And then, so that fixed cost has gone up by 10%. Okay. And labor and material has increased by 8 and 6%. Okay. But he cannot increase the selling price. He has no option of increasing the selling price. Okay. Now what happens? Okay. Now he obtains a further offer for 20%. Okay. He is only using 60% of the capacity now. Okay. So he's getting further 20% order. So he has unused capacity, so he can use it. So what they are asking you here is, what minimum price you will recommend for acceptance to ensure that manufacturer gets overall profit of 16,730. Okay. So you want net profit, total profit of 16,730. So what we will do, approach will be, first see what is the current profit. Okay, we'll just take 6,000 pieces. Okay, so one marginal cost statement you can just formulate for this 6,000 pieces. Okay, without the increase. And another marginal cost statement will be with this increase, this 10% and 8%, 6%. We'll increase this, and then we will find the marginal cost statement. Okay, in that we will get a profit. Okay, so that profit you will have to deduct from this. Okay, and that is what we need to get from this 20% offer. Okay, that's the approach. Okay, so if you didn't understand also, once we go ahead with the solution, okay, you will understand what I am saying. Okay, so now okay, so first thing is, okay, either you can prepare this old marginal cost statement, or you can straight away prepare the raised one, increased one. Okay, so that is what you need for the answer. Okay, so here what they have done is directly they have prepared increased one, but for you I suggest better thing is always prepare the basic marginal cost statement and then next to it prepare the increased one. Okay, so now what is selling price is 14.3, no change, right? Variable cost, material and labor, just increase the percentage, 106 and 108. Okay, so 3.5 and 1.25 is your, okay, 3.5 and 1.25. And what is the increase? 8% is labor and 6% is material. Okay, remember this, be very careful while reading. Okay, they put labor first and material next, otherwise you will take 8% as increase of material. Okay, so then, so after you've done this, you have got increased price, right? And work and sales overhead, there is no increase, just put as it is. So now this is your variable cost, add everything. Okay, so we get contribution. This is our contribution per unit. Okay, after change. Okay, the total contribution will be multiplied by 6,000. This is our total contribution. Okay, Now fixed cost is to be computed. For works overhead, it was 50%. Okay, just do 50% of 6.25. Okay, do 50% of 6.25. Second one, we had directly seen that 75% was fixed, so 0.6 was 6. This was 0.6 directly, correct? Here they have to do it in a calculator, 6.25 into 50%. Okay, so you will get this 3.125. Okay, second one is 0.6, which we got. So add these two, you will get per unit fixed overhead, which is 3.725. Now multiply by 6,000 units. So you get, this is your fixed cost. If you prepare a first marginal cost statement, then this will be the fixed cost in that. The second one, there is 10% increase. So multiply by 110%. Okay. So multiply this by 110% and you will get this. Okay. And then contribution minus fixed cost gives us profit. Okay. So now we have got, after increase in price, our profit is 10,905. Okay. So you understood how we did this? This part is clear before I proceed further. Okay. So now, so 10,905 is the profit which we are getting already. Okay. What is our target profit? Target profit is 16,730. Of that, you have already got that 10,000 whatever. Okay. So what extra you need to get to 16,730? 16,730 minus 10,905. Okay. This is the extra we need. This is the amount we need, profit we require from the new order. Okay. So here, so computation of selling price, what we have to do is here, first thing is order size is 2000 units, correct? That new order size is 2000 units. Variable cost we will have to incur variable cost fully. Just take the total variable cost. Just add these things. Okay. So we will get this 8.385. Okay. After adding all the variable things, 8.385. Once you put 8.385, okay, so variable cost is this much, 2000 into this, 16,770 variable cost will be there. And what is our required profit? Just now we discussed about it, 16,730, which was the total profit required, minus 10,905, which we already got. So we want this profit. Okay. Right. Fine. So this is basically your so variable cost. Okay. You added profit to it. Okay. So now because you're already at a profit, so your fixed cost is already recouped. Okay. Fixed cost is already recouped. Right. So only thing, so this profit is same as your contribution. Okay. This profit, required profit, is same as your contribution. Right. Profit and contribution will be same if there is no fixed cost, correct? So which is why here now sales, for sales minus variable cost is contribution, correct? Sales S minus V is equals to contribution. So S is equals to V plus contribution. When you add these two, you will get S. Okay. So this is your total sales, and for getting per unit, just divide by 2000. So you will get this. This is your per unit selling price. Okay. Fine. So this is one. So now we'll go for a lunch break now. Okay. So when I come back, we will do a couple of problems. Okay. And I'll give you some homework also. Right. So if you want to attend, you can attend. So this class I will close now. So you will have to join again. Okay. So you can join at 10. It's 9:32 now. If you want to join, you can join at 10, or you can continue seeing in the video. So I'll be taking you through 2 problems, and then I'll just give you 3 or 4 homework. Okay. And then we will continue tomorrow. Right. So thank you. So, right. Bye.